Peter Lynch said in his book, One Up on Wall Street, that selling your winners and holding on to your losers is like cutting the flowers and watering the weeds. What's going on, guys? My name's Emmanuel and welcome to my channel. Now, I've received a ton of messages and screenshots from you guys showing me your Boohoo positions. You know, some of you are up 10%, 20%, 30%. Some are even up 40% on your position. So a massive congratulations to every single one of you who are currently sitting in profit. But the follow-up question to that is, should I sell my position now and take my profits? Especially seeing as the UK has now officially entered into a recession. So it makes sense to sell, right? I'm not a financial advisor, so I try to follow the advice and the lessons taught by some of the greatest investors of our generation. And for the purposes of this video, I'll be referring to chapter 17 in One Up on Wall Street by Peter Lynch. Okay, guys? We will take a look at when the best time to sell is, according to this legend, and then we will apply these lessons to current day Boohoo and see whether we should be holding or selling our position. I want to give a quick shout out to Rago Returns for the request for a Boohoo update. You're a top man and you're a legend, bud. And if you're a Boohoo shareholder, or you have been a Boohoo shareholder, or you just enjoy Boohoo content, then please smash that like button, guys. Smash it for the YouTube algorithm, as it really helps my channel grow. And if you're new to my channel, welcome, and I hope you gain a ton of value from today's content. And if you do, hit that subscribe button, guys, and the notification bell to stay up to date with the content. With all that said, guys, let's jump into today's video.
All right, guys, I'm going to kickstart this analysis off with a quote from the man himself, Peter Lynch, and he says, if you know why you bought a stock in the first place, you will automatically have a better idea of when to say goodbye to it. And that's from the man himself, Peter Lynch. I keep telling you guys, buy his book, One Up on Wall Street. The link is in the description below, guys. Grab yourself a copy. This book is phenomenal. Okay, so why did I buy Boohoo stock in the first place? And this is why I love posting my research and stuff on YouTube, because it's a great reference point, okay? So if you haven't watched my very first Boohoo stock analysis video, check it out. I'll also put the link in the description below. Okay, guys, I've already gone through it and I've highlighted my reasons for buying Boohoo in the first place. Okay, but definitely, if you haven't seen it, check it out. Okay, so for the first reason why I bought Boohoo in the first place was, one, widespread UK media reports falsely suggested that Boohoo were paying their staff below minimum wage. But as time has gone on, we've now realized that it wasn't Boohoo that was paying its staff below minimum wage. It was in fact their supplier based in Leicester who was paying their staff below minimum wage. Now, the argument is still out there as to whether Boohoo were aware of it or not, but the fact is the media were reporting it as Boohoo were paying their staff, when in fact it wasn't Boohoo, it was their supplier, okay? And as a result of all that negativity, all those negative media reports, you know, you had massive brand boycotts were taking place left, right and center. As I can recall, Boohoo's third largest shareholder dumped all their shares, and as a result this led to a 49% decline of Boohoo stock. I mean, there was panic selling left, right and center, and I've already touched upon that on my Boohoo stock updates. So, and that will also be in the link in the description below, so check that out, guys. So the second reason why I bought Boohoo was because despite the stock declining by 49%, they actually had really strong revenue and earnings year-on-year growth rate of over 40%, guys. Now, a typical growth stock has a revenue and earnings growth rate of 20%. You can consider that a high growth stock. But Boohoo were doubling that. They were making over 40% year-on-year growth rate. That's crazy. When I saw those figures, I was like, nah, this is mad. How is this stock down by 49%? The third reason for me purchasing Boohoo was because they had an incredible balance sheet, guys. Definitely check out that video, guys. I go into much further detail of Boohoo's balance sheet. But at the time, they had a current ratio of 1.76. And as you know, guys, a current ratio of between 1 and 2 is considered a strong balance sheet. And the current ratio of 2 or higher is just a phenomenal balance sheet, all right? So Boohoo had a really incredible balance sheet. Their total current assets far outweighed their total current liabilities, which is why they had a current ratio of 1.76. And also, guys, they had £245 million in cash versus only 20 million in debt. So essentially, they could literally clear off their debt tomorrow if they wanted to. They virtually had no debt in place. And as well as that, they also had a positive and growing free cash flow position. So guys, this is a dream of a company, okay, that is heavily discounted. If I said to you, you can buy an iPhone for 50% off, are you going to turn it down? That's how I was looking at Boohoo stock at the time. I was like, my God, this is an incredible stock that's on sale for 49%. Number 4, guys, I also showed you the insider transaction. So at the time, the insiders were buying heavy. They were buying heavy. They were loading the boat with Boohoo stock, okay? So these are the 4 reasons that I highlighted in my video as to why I was buying Boohoo stock, okay? So the question is, has anything changed, okay? With all these 4 points, has anything changed in my rationale for purchasing? Well, in regards to the first point, there has been a change in Boohoo stock. So since my last video, guys, I posted that video on the 9th of July. And as you can see, the share price was trading at about £2.40. And since then, it's declined a bit. I added more to my position. And it's now currently trading at £3.12. I'm recording this live, guys, as the market is still open. So it has changed because it's no longer down 49%. It's actually up 26% since my last recordings. And some of you guys were buying Boohoo at around £2.10. With some of the screenshots you sent me, I've seen screenshots of people buying at £2.09. So you lot were buying at about here. So you guys are up over 48% on your position. In terms of timings, you guys were quite lucky on that because I got in, my average price is about £2.40. So you guys are doing much better than I am, and that's why you are up over 48%, and hence the questions, should I sell? So, has anything changed from the first point? Yes, it's much more expensive than when I first purchased the stock. And the second point is, has the revenue and earnings continued to grow at a fast rate? It might not necessarily be at 40%, but is it still growing at over 20% or more? And to answer this, guys, I looked at their current financials. I'm on Reuters for this, guys, because I do find Reuters are a lot more up to date with UK stocks. And as you can see, guys, the last financial report from Boohoo was on the 29th of February 2020. And looking at their previous reports, their financials tend to be reported on the 28th of February and also on the 31st of August, okay, because that's when they reported it last year. So based on that, Boohoo are going to release their next financials on the 31st of August 2020. So as of right now, because we only have the financial report from back in February, we cannot say with absolute certainty as to whether Boohoo's financials has taken a hit just yet. So the only way we would be able to find out is if we wait till the 31st of August for their next financial report. And I also think, guys, that is relevant for my third reason, the balance sheet. Do they still have an incredible balance sheet? The cash flow also been growing, and is it still positive? We will only find out on the 31st when they report their next financials, okay? But another thing that has changed is insider purchases and transactions. So let me take you to the insider purchases. So guys, here is my video of Boohoo that I posted on the 9th of July. So from that video, you can see all of the insider transactions that was taking place around that time. So as you can see, you know, this company, they bought 10 million shares of Boohoo. This lady bought 1,950. So these are all insider transactions, guys. This was as of July 9th, 2020. But since the 9th of July, guys, there has been even more insider transactions that's taken place. You can see here, Boohoo Benefit Trust, they bought 5.5 million shares on the 9th of July when I actually posted the video. On the 16th of July, this brother here bought 5 million shares of Boohoo on the 16th of July. This guy, Ian McDonald, bought 50,000 shares of Boohoo. Carol Mary, she bought 2 million shares of Boohoo on the 16th of July. So since I uploaded the first Boohoo analysis video, there have been a lot more insider transactions, which is always a positive sign. So yes, guys, out of the 4 points listed, I can confirm that there has been, in fact, 2 changes. And in regards to their financials, we can't confirm that until the 31st of August, all right? Right, guys, so before we go into the reasons to sell a stock, if you've read Peter Lynch's One Up on Wall Street, and if you haven't, again, I highly recommend it. He identifies 6 categories of stocks, and I'm going to give it to you raw, okay? I'm not going to waste any more time on it. That he categorizes stocks as slow growers, stalwarts, cyclicals, fast growers, turnarounds, and asset plays, okay? And I'm not going to go into every single one because it's quite detailed. Again, get the book, brush up on your knowledge on all of these categories because they will really, really help you in your investing decision. But based on these categories, I would class Boohoo as a fast grower slash turnaround stock, okay? So Peter Lynch provided reasons for selling in each of these categories, and we're going to look at the reasons for selling a fast grower or a turnaround stock because that's what I classify Boohoo as. So the question is, when do you sell a fast grower or a turnaround stock, okay? So number one, if all the stock's troubles are over, there's no more bad press and everybody also knows it, and the company has returned to its old self. So let's get some confirmation of that. So again, guys, I use Reuters to keep up to date with any news reports regarding a UK stock that I'm looking at. And as you can see, guys, the latest news for Boohoo was over a month ago, all right? There is no new news. There's no key developments. This was when Standard Life Aberdeen dumped almost all of its Boohoo stock, okay? So again, that was over a month ago. I also did a Boohoo news check on Google, and the most recent report was 2 days ago, and it was from IG Markets asking whether Boohoo is worth £3.50. 3 weeks ago, 2 weeks ago, 1 week ago. This was about a week ago from Retail Gazette, and ASOS are just revealing new supply chain pledges following the Boohoo scandal and whatnot. So nothing really of substantial news that's been reported within the last month, okay? Nothing worthwhile to be listed on Reuters anyways. So can I say that the bad press is over and the stock's troubles are over? I would probably say yes. I can't see anything substantial within the past month that's especially been reported on Reuters. So I would say yes. I'll give this a yes, guys, all right? So the next point is if professional stock analysis are all giving the stock their highest buy recommendation, okay? So if you've got Wall Street, you've got the London Stock Exchange, all of these analysts are saying buy Boohoo now, it's usually a good time to sell, according to Peter Lynch, all right? Let's take a look at what analysts are currently rating Boohoo as. If you take a look at analyst recommendations, okay, you can see that the current trend is a strong buy, a strong buy or at least a buy. All of these analysts, they're more in favor of actually buying Boohoo stock, which is making me a little bit nervous. And the least amount of analysts are saying you should actually hold. They're all saying you should buy more. There are no analysts, according to Yahoo Finance, that are actually recommending you sell. So that's a bit sticky. That's a bit sticky. So based on what I've showed you guys, are professional stock analysts giving this their highest stock rating? I wouldn't say they are giving it their highest because as you saw, their highest is a strong buy. But the general consensus from the analysis are that you should be buying or at least holding your position, okay? So I would probably give this a 50-50. So the next point, guys, is if sales are down 3% from the last quarter. This is an indication that demand for the products or the service is slowing down, okay? You don't want to be buying or holding if the company's sales are on a decline, okay? And again, the only way we can check this is on August 31st. Because if you take a look at their current recent quarterly growth rate, as I've showed you, they've been growing at 40%. Revenue back on the 28th of February 2019 was at 461 million. The next quarter, it was up by 564 million. And then as their most recent quarter, which was in February the 29th, they generated 670 million in revenue. So to answer that question, we have to wait till the 31st of August 2020 to see whether their revenue has grown or has declined. Okay, guys? All right, guys. And the next point to consider selling a fast grower or a turnaround is if the PE ratio is higher than its competition in the same sector. So if you recall from my very first video of Boohoo, guys, Boohoo is into the fast fashion sector, and their most formidable competitor, I would say, is ASOS. Okay, so what is Boohoo's PE ratio? Boohoo's PE ratio is currently sitting at 58.74. Now, don't get me wrong, guys, that is a really high PE ratio. It's definitely not a value stock, I can tell you that for free, but they have an extremely high PE ratio. However, when we take a look at ASOS, its main competitor, ASOS has a PE ratio of 89.44. That is huge, guys. That is a huge PE ratio. And Boohoo is trailing that by quite a significant amount, okay? Well, to answer that question, I would say no. You know, their PE ratio isn't higher than the competition in the same sector. ASOS's PE ratio is astronomical in comparison to Boohoo, okay, guys? So the last point, guys, is if the debt, which has declined each quarter, just rose in their most recent quarter. And again, guys, their most recent quarter was back in February. In order to answer this question, we have to wait to the 31st of August. So what's my conclusion? All right. Should you sell or should you hold? Okay. You know, deal or no deal. Actually, I don't even know what that program's on, but should you sell or should you hold? Okay. So me personally, I plan to continue holding my position at least till they announce their next financial report, which is due on the 31st of August. I don't want to necessarily jump the gun because I feel like if they do report a strong quarter, then the stock is going to shoot up even more. Because think about it, if they were able to grow their sales and their earnings during a 49% decline due to media press and big brands boycotting, then I just foresee this company just growing even higher. So I don't want to jump the gun on this, guys. I'm going to hold, and if the company do report a negative quarter, then I would probably consider selling off my position. So that's my conclusion, guys.
I was up over 30% on my Boohoo position, but it's currently had a bit of a down few days. And as I concluded in my analysis, I plan to hold. Peter Lynch says, the real key to making money in stocks is not getting scared out of them. So even if investors start taking their profits prematurely and we see a further decline in Boohoo market price, I'm still going to hold at least to the next financial report before I make any more decisions. And if they report strong revenue and earnings growth, then I would actually probably consider buying more and dollar cost averaging my position higher. But these are just my thoughts, guys, and it will be really cool revisiting this video a year from now to see how it all plays out. Ultimately, guys, make sure you do your own due diligence and your own analysis before you decide to invest in any stock. Remember, I am not a financial advisor. I just love researching and putting out my content on YouTube. All the links to help you with your investing are in the description below, including some books that I can highly recommend. Yo, get this book, get this book. Plus, my broker Trading 212 will send us both a free share if you sign up using that link in the description below, guys. With all that said, guys, don't forget to smash the like button again, hit the subscribe button and the notification bell if you want to see more content from me. Thank you so much for watching, guys, and I'll catch you in my next one. Peace.